Hi guys, hope you're good. Better late than never. Had a busy weekend, so I'll just get in on the computer now to do the review of last week. So there's a couple of really important plays that I want to go through from early last week, and they were basically proof that a flexible approach to risk management is much better than being rigid with every trade. If you're rigid, they would have you'd have probably took a hit on this setup that I'm going to show you. But being flexible allows you to some breathing room. Um, and then the other point, which goes hand in hand, is that don't be too focused on a small number of currency pairs. You need to look across the whole spectrum of pairs to find where a currency strength might um, not stop, but there might be a pullback. If there's a strong move, you need to find out across the board where that currency may come to a stop. So I've got a really good example, a couple of plays using TradingView Market Replay. I can show you exactly how things played out. So let's reduce the screen size and then get to it. So Sunday night market open. So a few people got into the Euro USD sell on the Friday. Which was here. Then there was another perfectly good opportunity to get into that sell if you missed on the Friday. So the gap fill, same last couple of weeks now, there's been a lovely gap fill. So gap was filled, move happened. Actually give a couple of opportunities to get in before a bigger move. And I actually, well, when you're trading from the strongest zones, your confidence grows over time, and this can take months and years. But you just know, and I hate blowing my own trumpet, but this is what I said in my Telegram group here. If you're in Euro USD, try and knock this down to at least a 23 fib from the move that started with the inflation data. So the previous week, not last week, the week before. So excuse the language here, but don't be a pussy and take a profit early. These sorts of trades, you should be looking for more than 30 odd pips. It might not get there, but there's a decent chance. And then they just went on to say that sometimes you have to risk, not making any profit to go for the bigger gains. These opportunities don't come around every week, but after that move up into that level on the Friday afternoon, on Friday, we've just market moved all the way. There had to be a pullback. Well, it didn't have to be, but the odds of a pullback were a lot higher than a continuation, in my opinion. So that's why I was confident enough to say just hold, and it played out really well. So that was the first one. Week started off great again, and then Tuesday things got a bit wild. So we had the Euro CAD. Let me go for Euro CAD. Sell. From this level. So there we go. Tuesday. You can see if we go down to the lower time frame, that price hit the level, consolidated slightly, and then there was a move higher. So again, let me try and find this message. So yeah, another confluence to this trade was Aussie CAD hitting the same level at the same time. Not the same level, but a similar setup. So we had the level and the 200-day EMA. So the market actually did a bit of drawdown on that level, but then it still made a good pullback. So we had the two pairs, two Canadian pairs at strong levels for buys, but Euro CAD kept going, and the reason was because Tuesday the 15th, we had a weak US dollar. So let me do the split screen, and then hopefully I can show the actions that I took when Euro CAD was breaching. It's probably not the smoothest production here, but just bear with me because it's really good information. My presenting skills might not be fantastic, but I'm pretty sure it's going to benefit excuse me, benefit a lot of people. So I've drawn in a level on the 200-day MA. So the reason for that is this level has been breached in this one move. This level's been breached. The 200 EMA has been breached. The 200 moving average is the last confluence in this move. There's no others. There's this level here, but that's a hell of a move. So to get to this level, it would have been a hell of a move. And markets, they don't, candles don't go forever in one direction. So if we look at the level, we go to Euro CAD and replay the market. So the crosshair is it lands on the same time on both charts here. So I'm controlling it on Euro USD. This is where the 200 moving average is, 200-day moving average. So you can see that the market here isn't quite, I played it back in time, so we're currently at 8 AM, and here we're looking at here 10:30. So we need to play this market on here. And you'll see what happens. Sorry, go back a bit slower. So this 10:30 is where Euro USD actually hit. Same time. So Euro USD was pushing, both euros across the board was pushing, and it doesn't matter if there's a confluence on Euro CAD or a zone on Euro Yen or Euro New Zealand dollar. The main driving force in the market is the dollar. So Euro against the dollar, the two most heavily traded currencies in the market. So when price actually got to the 200 moving average, which is the last confluence, within reason, that there's always a potential it could go further, but that is when I would have closed Euro CAD if price started pushing higher, then I would have manually just jumped out of Euro CAD. But that just shows why you've got to have some flexibility in your risk management, because this did, you know, almost 50 pips drawdown. But I said in the chat, the main focus for me at the moment is the 200-day moving average on Euro USD. If that breaks, I'll drop the Euro CAD sell, and it played out perfectly. Because, and the reason for this is that if there's people in a buy here and it's broken the first confluence, which was a level, it's broken the second confluence, which was the 200 EMA, and then it gets to another confluence. For people not to take profit, they're stupid. They have to take profit because there's no other confluence that's near. So for them not to take profit it's just pure greed. So a good trader does not suffer from greed. It'll see that the price has now got the last confluence. I've got to take some of my positions off here. Got to secure some profits. So they do that, and then that reverses the market. So that was why I had to be patient and just wait for this, and then it allowed to get out. And then there was half one was US PPI, which came in and give dollar weakness, and the euro popped up again. But then if you still held onto Euro CAD, you know, it didn't really go any higher. It just popped up slightly, and then there was a bigger drop. So the zone worked. It's just that you don't know how far past price is going to go, because Euro USD wasn't ready to pull back. So this is why you need to have a flexible approach to your risk management. I know I've talked a lot about that there, and the production wasn't very silky, but it's just wanted to give you an example of why flexible risk management and patience and accuracy. So accuracy, I mean that a high percentage of your levels work. So this is why I say to people, just scrap the lower time frames, because you'll have a lot more trades and a lot more losses, so your accuracy will be really low. Not really low, but you won't have the confidence in each level, and you won't have the confidence to have the patience or the confidence to have a flexible approach to risk management. It's if you stick to that hard and fast rules, then you're never going to get anywhere in the market. It's a different way of thinking. Like, people who are not great traders think, if I have a 3-to-1 risk reward ratio, I only have to win a third of trades, and then I can still make profit. Well, that's completely wrong in my opinion. My experience, that's wrong, because you cannot lose most of your trades and keep a solid mindset and continue trading the same strategy when most of your trades lose. You'll lose the plot at some point. You'll start changing things. You'll start moving away from your strategy. It just doesn't work in reality. So the best thing to do is have a flexible approach to it. I've covered a bit more in that in the Telegram channel as well. So, and hopefully there'll be some mentoring soon as well for people who really want to enhance their risk management skills and the accuracy of their trading, really, and journaling, which is the most important factor in trading for me. So there was a couple of plays which I was fully confident in, and they played out. It's just something that grows over time with experience, and only trading from the strongest levels, basically. So then we go on to Wednesday. So I had no trades on Wednesday. It was things got a bit quiet. So we had the rocket landing in Poland on the Tuesday evening, and that basically the market just went quiet because it was waiting on developments from that. So Wednesday there really wasn't much going on, and then Thursday was the same for me. So Wednesday night we opened up the Telegram channel for a bit of a group chat, so people could ask some questions, and it was really productive. So that took up quite a bit of time. And then Thursday again, there was no trades. That was quiet. And then Friday, I had this Aussie New Zealand level hit. So this was the zone. From there to there. So that hit, didn't really see much of a pullback on there. So remains to be seen if we get a pullback on the open tonight. I'm not sure on that one. And then there was another scenario on Friday, which was worth taking for me personally for a day trade. And these are the sorts of things that, as you develop your confidence and your experience, the trading in the zone, the title of the book is a fantastic title, because when you're in the zone, things just work for you. You just get a feeling, like a sense for how the market's going to play out. So euro at cable, pound US dollar on the 4 hour. So there's a strong move down, and then just a real sort of slow drift up then for a whole day with no real pullbacks. So it's a daily level, and there's been two pretty strong reactions from here. So 100 pips and then 200. So for me, that was worth creating a zone around, and several confluences that sort of it is a situational based trade. You've had two strong reactions from this to create the level. So on the daily, it was just the two wicks, and then the situational part of it is the move into it. So when you create a zone, the zone strength goes hand in hand with where's the market coming from and how did it get there. So there was just a drift up, continuous move for a day with no pullback. So for me, the day trade, it was worth taking. It was worth trying. So just had the zone obviously marked up between these two, and then took the sell, secured some profits. And because I have buys from cable lows as well, I'm now positioned nicely that if we do get a move down, I'm going to profit from it. And then if eventually we get a continuation higher, I'm going to profit from as well. So I'm covered for all angles on cable. So it's quite a good situation to be in. But that's it. I wanted to try and make this video quick, but obviously it was really important for me to just go through the two plays at the start of the week to just show how confident you can be, and things play out the way that you think they will once your confidence grows. And it was all documented in the Telegram channel before it happened, so it's not like I'm looking at these charts and just talking about what's happened, because in the Telegram group I said what would happen before it actually happened. So it's if anybody wants to jump in the Telegram, it's the links in the description. So just hop in. We're gonna have an open session for questions again this week sometime, and we'll also gonna stream some live chatting sessions on YouTube as well. So that'll be this week when Wales aren't playing. So enjoy the World Cup. Trade safe.